A quarter-point hike. The Federal Reserve in a unanimous decision raising its benchmark interest rates by 0.25% to a new mid-range of 50 to 75 basis points from the old one of 25 to 50 basis points. It brings the midpoint to 0.625% from the prior of 0.375, call it 62 basis points versus 38 basis points. The Fed also increased the rate outlook for the next several years by essentially adding a single hike to next year. The average Fed official now looking for 3 hikes in 2017. That is up from 2 if they go by quarter-point hikes. So the 2017 forecast now is for a Fed funds rate of 1.4% versus the prior forecast from the Fed of 1.1%. So it's a somewhat more aggressive Fed for next year, but that just carries over into the subsequent years such that when you get down to the long-run rate, it's 3% versus the prior of 2.9%. The Fed expectations remain for only gradual increases. The risks to the economy, the Federal Reserve says, are roughly balanced. Also, of course, the Federal Reserve raised the emergency discount window rate from up to 1.25% from 1. The Fed now looking for somewhat less improvement in the labor market. In other words, it says that its policy supports, quote, only some further strengthening in the labor market before it was further improvement. So it's not looking for a whole lot more from the labor market, though it does see improvement coming and also sees inflation headed towards 2%. A couple things on the economy. It says the economy is expanding at a moderate pace since mid-year. It had been a modest pace. I don't know what the much difference is there. Unemployment, it says, has declined. Job gains, it says, are solid. Household spending rising modestly. Business spending is soft. Now, inflation, they're a little bit more worried about inflation. They say it's increased before they said increased somewhat. So those are the big headlines, guys. A little bit more concerned about inflation. When you look at the language, they talk about the market-based or the inflation spreads in the market having gone up quite considerably. So quarter point here and maybe a slightly more aggressive Fed for next year, but not, by the way, for outlying years beyond 2017.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.